Hi, I'm Melissa Bill, and welcome to the Business Roundup, where we catch up with the movers and shakers in the business world. Today, joining me is Barry DiRaimondo. He's the CEO and founder of SteelWave, and Mitch DiRaimondo. He's the founder of SteelWave Digital. Thank you so much for joining me today.
Happy to be here.
Kick it off with more of SteelWave and talk a little bit about that. So, as we get started, I know like commercial real estate's different than real estate, but real estate, regular residential, but definitely ups and downs happening in the market. Um, I like to let people start off by talking a little bit about their expertise, kind of how you got started and how SteelWave was founded.
Well, I can at least speak on my part. My route to real estate's a little circuitous, if you will. I'm actually a biochemist by training. Um, and the intended path was med school. Everyone in my family is a doctor with the exception of me. And I spent a couple years after college doing research to figure out, really not a couple years, probably less than 1 year doing research to figure out if I want to go on and get a PhD. And I hated it. So I said, okay, let's go to plan B, this whole doctor thing. So I applied to medical school, got into medical school, and realized that's really not what I wanted to do. But during college and up through probably 3 years past college, I had started up a small construction business just to pay the bills. And candidly, I went to a homeowner whose house we were rebuilding and said, what would you do if you were me? He said, go to business school. You'll figure it out from there. So I went to business school with an eye towards either leveraging my technical background and going to work for a company like Genentech on the biochem side of things, or leveraging my construction background and going to work for a large real estate firm. And it just, when one thing led to another, I ended up at a large real estate firm, Lincoln Property Company. And it's really just an outgrowth of that, how I got into real estate. Uh, and it's really almost come full circle because now, at least for the last decade or so, a lot of our effort is spent providing work environments, developing or redeveloping assets for the life science community, which is really biochem and drug discovery and genetic engineering and things like this. So, it was an either or, and now it's sort of a combined both on some level. And that's really, my path to the real estate world.
That's pretty crazy. And I know now the legacy of SteelWave, that's pretty much national level. Your projects kind of range from California all the way to Florida. Are there any like hot spots or places that you
Well,
see
there's
more?
there's there's really not. Our focus is markets where the technology sector has an enormous fingerprint. So, and it's west of Texas, with the exception of Austin. So it's Austin, it's Denver, although Denver is probably the least techy of our markets. It's Seattle, obviously it's the Silicon Valley and the Bay Area, and it's LA, San Diego, and Orange County. So everything we do is sort of geared to the tech sector demographic. What we do is provide kind of live, work, play environments specific to kind of this younger demographic. It's really not geared towards back office. It's not geared towards lawyers. It's not geared towards accountants. So it's a little different amenity package and a little different setup that appeals to whether it's defense tech, biotech, traditional tech, media tech, go down the list. It's some level of tech.
And I think when I think about that, I think about the Elon Musk, the city he was building in Texas, where it's kind of they want everything in one place, where they're going to work, live, and have their, kind of their everything right there at their fingertips.
Well, I think that's right. I think it's providing a work environment that provides a few things. Number one, it keeps people on site as long as possible because they want to be there. That's first and foremost. I think the other thing is provide a work environment and just a general level of occupancy that you can leverage your brand around. These companies spend an enormous amount of money developing their brand. And it's important that the real estate helps leverage that brand. And if you tour Google's headquarters or Apple's headquarters or Meta's headquarters or Microsoft, go down the list, they each have their own brand in mind. It's not, one size fits all by any stretch of the imagination. So, what we're trying to do is create real estate. Obviously, we can't create it specifically just for Google, but it has enough of the elements for them to be able to leverage their brand because their greatest asset is their people, and it's all about hiring people. And if you can create a brand where the people actually want to come to work, that's an enormous benefit.
And I know many of well, we were talking about that, the tech and science, but we have AI now too. Are you seeing a big kind of like boom in that industry as far as like the work type, life environments, and I know even just for data centers.
Well, what we're seeing in the Bay Area specifically, the Bay Area, and when I say the Bay Area, I mean San Francisco down into the Silicon Valley, is actually on fire, literally, with the growth of tech. And it's driven by AI. And it's not necessarily open AI, although they're certainly taking a lot of space, but it's AI adjacent companies like robotics, autonomous vehicles, synthetic biology. You've got all these other kind of frontier technologies that are taking off because of AI and how it's leveraging that particular business. And, on some level, when you look at tech's heavily dependent on capital, very dependent on capital. So, as venture capital investing goes, so goes tech, at least from a growth and from hiring perspective. And there's been an enormous amount of venture capital invested over the last couple of years. And you can see it cycle in, cycle out. The amount of venture capital investing that's happening right now compared to on average every year in the last cycle is about 3x, which is enormous. And a lot of that is AI oriented, but there's a difference this time around. And the difference this time around is that the biggest venture capitalists actually aren't venture capitalists. It's the Mag 7. It's Google, it's Apple, it's Meta, it's Amazon. These guys have enormous venture capital arms. And on some level, they're at a severe advantage to the Sequoias and these guys of the world because of their insider networks, number one, and the fact that a lot of these startups require the infrastructure that the Mag 7 owns in order to operate, whether that's cloud computing, whether that's, the app store, go down the list. And they can use those elements of technology as a form of currency when cutting a deal with the startup companies, such that their cost of capital is less. And so what you're seeing, I think, during the first half, you have to check this number. During the first half of 2025, the venture capital investing in the Bay Area was about $71 billion, which is a huge number based on historical standards. And that excludes the amount of venture capital that the Mag 7 is going to invest, and they're expected to invest upwards of $300 billion in
Everywhere.
2025. Now, a lot of that's going into, the hyperscale data centers and all that stuff, but about 20% of it is non-hyperscale data center related, which is a huge amount of additional venture capital. And right now, a lot of that's pooling in the Bay Area, which is why you're seeing the Bay Area so on fire compared to LA, for example, or San Diego, or Orange County. It's just a whole different feel at the moment.
That's going on. And I know now, are there any like high profile type projects, past or future, that you can talk about?
Well, we've got, excuse
I
me.
would say the Andrew campus is probably at least my favorite. That one's a great case study to kind of go through.
Yeah, it's and it speaks to what we do. What we did was just prior to COVID, we bought an old LA Times printing facility in Costa Mesa down in Southern California. And if you've ever seen an old printing facility, it's really just a giant warehouse. These old printing presses are like 50 feet tall. They're just huge. So it's just huge warehouse that we converted into super cool multi-storage uh, and multi-floor creative office. And we cut holes in the building. We put sky cuts in it. I mean, it's not a warehouse, and you can go online and we can probably send you some pictures of it. But it's something that's super cool. And in the heart of school, and I think in 2022, like in the middle of the whole COVID thing, we signed a lease, 650,000 square feet to lease the entire facility with Anduril, who at the time was a startup company. They're obviously a large defense contractor now. But I think when we signed the deal, they had a market cap of $2.5 billion. I think it's upwards of 40 billion today. But it sort of speaks to kind of the environment that we're trying to provide. We've got another very large project in Northern California in South San Francisco called Infinite, which is a very large life science project next to San Francisco Airport, which is 2.5 million square feet at final build out. Um, so it'll be a very significant project. But both of them obviously, one's defense tech. That's not really what we had in mind when we built the building, and the other one is life science.
That's
I
great.
would
I
also speak, if you don't mind, speaking
Sure.
to kind of how, SteelWave itself has been, we're in the office space, lab side. We've been pretty much evolving when the market evolves. Barry, you should speak to kind of the mixed use and industrial plays you guys are thinking about now.
Well, yeah, I mean, look, again, it's live, work, play environment. So, and on the work, it's office, it's life science, and it's industrial. On the live, play, it's mixed use retail and residential. So, a lot of what we've been doing more recently, we formed a venture with a group called Steerpoint on the retail side, and we've been buying B malls in California. And these malls are well located, but candidly, they're twice as big as they should be, given the different, demographic and the retail profile for today. So the idea is you buy these malls. They've probably got a dead anchor. Maybe that's a Macy's, maybe that's a Sears, maybe that's a J.C. Penney, whatever. And you tear down half the mall, and you re-entitle the land that goes with that half into housing, whether it's apartments or for sale housing. And then you build back non-mall retail in the interface between the old mall and the new residential and create the illusion of an A mall, because you're creating this retail interface that's not mall space and it's not mall tenants. It's sort of high end food and beverage and entertainment and stuff like this. And that creates this interface where the user experience doesn't feel like they're at an indoor mall. It's very different. So we've been doing a fair amount of that, and I expect us to do more of that.
Yeah, I've seen, I don't know if it's similar, but even in Miami, in a smaller type of thing, they had like Midtown and the Design District kind of did something similar. And it's just like you have everything pretty much like restaurants, the stores, and then you have the apartments and some homes behind it. But everything is really accessible within walking distance together.
Yeah, the key is to create an ecosystem where it doesn't feel like multiple projects next to each other. It feels like everything was sort of an ecosystem that was designed where the parts sort of leverage themselves. So it's not like an apartment guy built something over here and a retail person built something over there, and maybe an office building got built, in a different corner. The goal is to have it fully integrated where they actually play off of each other.
Right, so it flows together and it looks like aesthetically like something, like, yeah, you want it to be, like, beautiful where you're living, and I even see, like, they have, like, gardens for people who have pets and stuff like that. It looks like it's just a nice, like, area. They have, like, everything for, whatever, if you're a pet owner and just different types of things, like, for people if they wanna listen to music. It's just that's how they kinda have it planned out over there, but it's nice, definitely.
Well, and you have to be conscientious about how the uses fit together. It's not like you're going to put a $2 million condo above a bar, right? So you got to think about, you know, how this stuff works vis-a-vis noise and traffic count and all that stuff. So it takes a little bit of thought. But, if you can land the trick, and not many people do a very good job of it, but if you can land the trick, it actually works out really well.
And I know another thing we were gonna get into, Mitch, we were talking about it earlier, is there's another part to SteelWave. It's SteelWave Digital, which is another area. When was that created?
Yeah, I mean, so when I went to school, my father told me, he's like, don't go into real estate, go where the puck is going. So when I got to school, it was 2016. We kind of saw where this whole crypto market was. We launched a company or a hedge fund called ECI. Basically, the thesis was if we can control the volatility in this space, we can control the risk. And if we can control the risk, we can get institutions to come into this space. Once institutions come in, the space develops out as a more, scalable asset class. Call it what you want. So we went to school. We founded a company. We did that. Graduated in 2020. It was very successful. We saw the good, the bad, the ugly. And I went to Barry. I'm like, look, Barry, I think this whole concept of smart contract, tokenization, fractionalizing the bigger asset classes and releasing them globally could open up a lot of doors for what we're doing on the real estate side of stuff, right? Because we don't build just, single family homes. These are, marketing pieces for some of the largest tech companies in the world. And if you think about it, it's almost better than buying their stock because you know that they're not going to flop on their main campus because, that would completely create a company. So we set out with that mission going, hey, let's take some of these bigger deals, split them up, call it CMBS round two, and start releasing different coins to market to get some liquidity behind, this locked up capital. We started in 2020. Um, the regulatory space and the administration at the time saw this as a threat as opposed to an asset to really coming into the market. So not a lot happened in that arena. 12 months ago, that started to shift. And I think you're starting to see regulation come into this space where that actually becomes a reality, right? So we've gone down a couple different avenues of real estate. We're looking at some international sports teams and stuff like that to kind of build the assets to release them into this Web3 space. I'm sure Barry has a different opinion of how it started, but I think it was the right time, the right place with a asset class that everyone wants.
Yeah, think of it as a stable coin before stable coins were a thing. The whole idea was to create, have stable real estate underpin a digital coin, as opposed to some painting or some fictitious plot on the moon or something crazy like that, which is a lot of what people were doing. We said, let's take an asset, let's build a coin that's secured by the asset. So you'll have a security interest in the underlying asset. Now, as it turns out, in 2020, 2021, 2022, 2023, 2024, and today, you can't do that. It's not legal in the United States to actually do that. It's not illegal either, by the way. It just falls into this giant gray area of non-regulation that needs to take place. But if you think about real estate ownership is very cumbersome. It's either a limited partnership interest, maybe it's a tenant in common interest, maybe it's a non-traded stock interest, maybe it's a fully traded stock interest, but you typically wouldn't, create a REIT around a single asset. You just wouldn't do that, a publicly traded REIT. And these interests are not liquid. It's hard to sell your limited partnership interest unless you're selling the asset with it, right? So what we said is, look, if we could create an ownership wrapper where the interest in that ownership were very liquid and very portable and kind of frictionless to sell, that would be a good thing for real estate. And that's really what this is. But it still needs to have the regulatory and the compliance cake fully baked, which it's not yet. But, you know, the SEC and the different agencies right now are fully focused on putting together the regulatory stitchwork that has to happen in order to be able to do this. And I,
You're so basically, look, like all this, the glass ceiling was really broken when Vlad out at Robinhood was, let's go list OpenAI and SpaceX on my platform, right? He's like, look, let's go buy this private asset under him, release it to the open market, sell it to like your everyday investor. So we were always saying, we're like, look, it'll happen first with simple securities, private, companies like Anduril, like groups that people want access to. But once people realize that this actually unlocks a bunch of these private market assets, that's the real like play here, right? Where it's like all of a sudden you're getting something that you previously couldn't have gotten, especially if you're an international player, at a lot lower minimum and a lot less fees. So that's where we're like, look, if we can position ourselves when the time is right with the right assets to be bringing into the market, we could really be a market leader of providing scalable assets into a market that previously institutions like wouldn't even touch because of the asset type. So now we're really flipping the script on them. Now we saw with real estate. We also see it. I mean, look, it's going to happen internationally first, right? The U.S. No one's coming to the U.S. because I don't want to spin up an entity and just be sued, right? It's not really in the game plan. But if you have an international asset, let's say with an international family office, all of a sudden you can wrap that into a synthetic wrapper, call it what you want, where you can list it on an exchange like Binance and build in benefits to that coin, where it's basically like owning a piece of a soccer team, for example, right? It's like, let's go with a team in Mexico. They have a fan base that's very diehard. They want to be a part of it. But, for them, there's no way they're writing a $20 million check to go step into the team. Well, all of a sudden, if we can take this, wrap a wrapper around it and sell it to the fans, where it's like, if you buy the coin, you get the appreciation of the team over time. Let's say we sell a player, you get a dividend payment from that, but you also get access in the stadium, stuff like that. That's where all of a sudden it gets a market fit right now, right? I think down the line is when real estate gets unlocked. And when real estate gets unlocked, it's going to turn real estate from this like highly illiquid, scalable asset to the next generation of what a yield play looks like, right? All of a sudden, you can, instead of going into a money market, getting 4%, you can step into a real estate deal getting, 6 to 8%. That's equally as liquid as that money markets piece.
yeah, we sort of viewed it as a form of permanent capital. We spent an enormous amount of time and effort to create these super cool assets and go lease them to Google or Meta or whoever. But because of the type of capital we're using, that capital needs to be recycled. And you can only recycle that capital by selling the asset. And we said, if we could recycle the capital without selling the asset, where, the owners of these digital securities could liquidate whenever they wanted to liquidate, it just provides a form of permanent capital for us to effectively put real estate on balance sheet.
That is pretty cool. And it also democratizes, private investments. I know you were pointing that
Totally.
out too.
Yeah. No, I mean, look, anyone can come join the party. You don't have to invest, 5, 10, 15, $100 million to get into the game. You can invest $1,000.
And that's why I think it's going to happen last in the US, to be totally honest with you, right? Like this private ecosystem has been kind of held as like, everyone wants it, but very few people can play in it. This is going to shatter that, right? And it's being gatekept by all the individuals that are getting fees for these private assets, right? It's like, they're not going to just turn over and go, oh, yeah, that's great. We can now go, sell our asset internationally. And, I'm not getting my 2 or 3 bips off the top, right? So that's why I think you're going to start to see regulation come into the space. But I also think it's going to be fought tooth and nail because people realize that this is kind of the way that the letter went to the email, went to message. That's the same way asset ownership is right now, right? We're still in the paper deed phase, right? The fact that there's title insurance in the real estate ecosystem shows you exactly like how archaic this is, right? Throw it on a blockchain. You don't need that anymore. And I think you're going to start to see that evolution happen over the next 18 months. If you'd asked me, during the previous administration, I would have told you it might be 4 to 8 years. Under this administration, all of a sudden, you see, Scott Bessent, you see David Sachs, you see these individuals surrounding the administration that actually are market leaders. They know what needs to happen in order for that to like become a fruition, right? They're not bureaucrats that sit behind a desk. And I think that itself has spurred this into action. And we're excited to be kind of on the front edge of it.
It's
Yeah,
gonna fast
it is
track
exciting.
it. Yeah, absolutely. And now if people, wanted more information on SteelWave, the company itself, or SteelWave Digital, what would be the best way to find it?
Well, we've got a pretty all-inclusive website,
Okay.
that's for sure.
And, we have a really good like media pipeline where we're coming out with stuff and ideas, Twitter, LinkedIn. We sit on podcasts very frequently. We're speaking. And I mean, half of my job, at least in this whole Web3 ecosystem, is education, right? Like when you're walking some family office through this and you're going, hey, you actually have an option for liquidity. They didn't even know that existed, right? So it's basically trying to teach them, hey, here's what exists. Here's why you should do it. So we're very vocal about that. We're online all the time.
Yeah, the
Okay.
ecosystem has done a very poor job sort of explaining itself. When you're talking to someone in the world of crypto, they tend to speak crypto, and it's people's natural tendency is A, I don't understand it, B, tune out. If they spoke traditional finance, because it's the same system as traditional finance, it's just using different jargon and things like this, but it's basically the same system. Maybe it's blockchain based and it's smart contract based, but you know you've got the same pipes to move the assets from point A to point B amongst the participants, but it's just understanding and cutting through the jargon so you can understand really what's going on in this ecosystem.
So part of it's gonna be not just, regulation, but also education, I think,
Totally.
because yeah.
Very much so. You know, you have to have the regulation to make it legal, but then you have to have the education to make it relevant.
For people. Yeah,
Right.
absolutely. Well, I'm excited to see where it goes because I know there was a time they were talking about real estate and backed with real world assets and that type of thing, but then everything kind of fell off the map, about 4 years ago. And then since Trump kind of, well, I want to say so the new office kind of stepped in, it's definitely changed as far as the regulatory environment.
Well, all of the big
Yeah.
asset management houses, whether that's Franklin Templeton or BlackRock, Goldman Sachs, all of them have been building out their digital securities teams and their internal protocols and blockchains to bring their financial products on chain. And they've been doing it for 3 years. Now, they can't do it yet because of all the regulatory, hurdles that have to be crossed, but that will happen. And I think that'll happen within 12 months from now.
Yeah, I couldn't agree more. And look, like I've been in the ecosystem since 2017. So we've seen the good, the bad, the market cycles. We saw the FTX, we see all this stuff happen, right? And, when I brought it to Barry in 2020, he goes, look, everyone's talking about the quick buck here in crypto, but at the end of the day, this is really an ownership play, right? All of a sudden, you have a way to transfer ownership peer to peer without going through, traditional rails, which means the fees are a lot less. So seeing that grow has been huge, and I think you speak to it. RWAs, We were talking about in 2020, it didn't get much traction. You had a bunch of groups spin up. Obviously, I think some of their capital runways spun down. But the biggest thing that's happened is, Solana listed Galaxy on chain, the security itself, a couple weeks ago. And that has set a precedent going, look, you now can define a security and we need to understand what that is, right? The Howey test is something that needs to be tweaked here because it's hard to underwrite a digital asset to something that was written in, 1940. So that's where we're sitting. And I think we have the right people in the right seats to make that happen.
It's
So that's
exciting.
yeah, very exciting. Well, I'm very happy you both joined us today because I've learned a lot. That's the one good part about my job, I think, is that I get to learn quite a bit from like the different people that I speak with. So I really appreciate you coming here today.
Yeah, we
Happy
really
to do
appreciate you
so.
having us. This
Yep.
was great.
Well, thank you. Thank you for joining the Business Roundup, where we always try to bring you interviews with some of the leading people in business, whether it be technology, finance, or energy. I hope you tune in. I hope you subscribe and listen, and we'll give you updates for new interviews that are coming up. Until next time, I'm Melissa Bill.